Hello, everyone. Welcome to the weekly roundup. Today we will cover Canada's proposed budget, some economic news, and market sentiments. Hello, Ben.
Hi Eva, how are you?
I'm good. Well, I was good till I learned it snowed last night. And so it begins.
It's November. It's time.
No, but it's just the beginning of November. I thought we still had, some time till the end of November.
Maybe. We'll see.
Yeah, boots out, boots out.
That's it.
Okay, so we're going to start off with Canada's proposed budget. What are the implications for the proposed 78 billion deficits for the next fiscal year? What sectors could benefit more from the new budget, and what risks should investors keep an eye on?
Yeah, so it was definitely a good read, new budgets, lots going on. There was a conservative MP that crossed the floor to join the Liberals, so that puts Carney 2 votes away from a majority. So it's interesting. But as for the budget itself, I think there was a lot of good stuff in there. Um, the pessimists say should have done more. It was the time to, drop the hammer and do all these things, put all these things in place. I think the biggest thing I think people missed out on is they were hoping for corporate tax cuts. There's other countries in the world that have done and been a bit more progressive on corporate tax cuts, and that would be bringing a lot more companies to Canada, etc. I think that's probably still part of his plan, but down the road now for the first budget. As for this one itself, I like the fact that he split operations and CapEx, so more of a company type of approach to it, where his objective now is to balance the operating budget or the programs or, the day-to-day running of the government that, he split that into one bucket and then CapEx, which is infrastructure projects, etc., into another bucket. I mean, I think that's a little bit more tangible and easier for Canadians to understand as well. And yeah, to your point of who's it going to benefit, it's going to benefit infrastructure. To what degree and what level, I guess we'll see. So that'll be, likely pipelines, potentially refineries, maybe retooling some of the existing factories and manufacturing that we have in Canada. Tilt a little bit towards green power. So it could bring some tailwinds, for lack of a better term, to that sector. And yeah, if you followed Carney before, he is positive on ESG type of investing. So I think generally the tilt is that way. I think the tilt of the economy away from being so reliant on the US was part of the focus. So generally, positive. I think when Trudeau first got in, I said the same thing. So, right now the next stage is what's execution going to look like? How's it going to be done? One of the things that we've struggled with in the past is getting it to market quickly. So, I hope it's not like a project that's, 2045 in the making kind of thing. If they're going to get going on these infrastructure projects, then you'd love to see these with goals of, 18 to 24 months or, something in a reasonable time frame that can be done. And around the world, there's a number of countries that have executed on putting things in place over a short period of time. So right now, I'd say generally positive. Let's see execution now, and hopefully he can push forward on a lot of these things.
Okay, so the US government shutdown has dragged into the second month. How long realistically can this continue, and what impact is it having on financial conditions?
Yeah, so I think it's probably today that it becomes the longest ever shutdown. So it certainly has been in a long time. To financial conditions, to your point, it's negative. It's tightening financial conditions because they're, taking money from here to pay this and moving money around to try to keep the government going. It's a It's a frustrating a little bit one because it is a self-imposed debt ceiling that they've ran into, right? So they decide that we won't until we get an approval, we can't move the debt ceiling level up. And so that's tightening financial conditions. And so I think that's rippled through into the markets. So, some fundamentalists think it doesn't matter. It's nothing to do with that. The financial liquidity doesn't matter. It's just where we are in the markets. I think it has a material point to adjusting financial conditions. The other thing is for all the data hawks, like everybody that wants to watch every data point, they're worried because everything's stale now. So anything that the central planners are looking at um, aren't necessarily reliable. You could argue maybe they weren't reliable before, but they're not current, and so that makes people a bit concerned, upset. It looks like right now it's about a 75% chance they're going to cut in the next meeting in the US, but there's the worry that if we don't have the right numbers, how are they going to make a decision on what we're going to do there? So it is a lot of unrest. On the other side of that, likely what you're going to get is an influx of money into the system once government gets back going. You're going to get liquidity conditions getting a bit better. QE stops Q sorry QT stops December 1st, and just thinking of maybe the stimulus comes on faster, liquidity comes flooding back a bit faster because they're worried about the damage that's been done in the shutdown. So and the last question I think you asked me is how long can this last? A long time. But I think we're getting close. At least our team thinks we're getting close to a resolution at the latest mid-month, but certainly important to pay attention to and watch.
It's a relatively new month. How about a quick October recap and what we expect for the rest of the year?
Yeah, so October ended up being a pretty good month again in markets. We had a bit of a down couple of days into the close of the month in October, but generally positive for market conditions. Bonds have been sideways most of the year, but overall equity markets have been positive. Obviously, we've had a bit of a material correction in the gold market. So if you recall, I think it was October 15th, 16th, whatever the day we recorded that Thursday, was a short term or at least a peak in gold and gold miners on that day. And we've been sideways to down since then. So gold's trying to find its footing. And so that we'll continue to watch to see what happens from there. To the point around what happened after the budget, Canadian dollar actually weakened a bit further on the budget. I think it's temporary. So if you're have US dollars buying Canadian makes sense, but if you need to buy US, probably it makes sense to wait a little bit. But yeah, so generally positive. Start of the month, it's been choppy, really choppy, and start of November so far. And so I think that government shutdown is rolling over into financial markets. And the other piece is we saw the tariffs going to the Supreme Court this week. So geez, I'm starting to lose track of the days here, but yesterday, 10:30 yesterday morning, they started to hear if Trump has the legal ability to enforce tariffs. And so we're not going to have a resolution immediately, but if Supreme Court rules against Trump, then all these tariffs might disappear. So that'll have financial implications to markets as well, but that's not, I think, as pressing as financial conditions.
Fingers crossed.
Yes.
Let's see the charts.
All right. All right, so we're recording this on November 6th, Thursday, November 6th, or just after 1 p.m. So anything that happens now between now and next Thursday, we'll comment on next week, but I want to go through and hit on a couple things that happened this week. So the first chart we'll talk about today, chart 5 from one of our research decks. It's the budget, and I talked about this before, the splitting between operational and CapEx. So we're starting to see the focus a little bit more on getting the operational budget into balance. And so that would be the ongoing cost. And if you read through the budget, there's something in the neighborhood of 40,000 jobs that they're looking to reduce. Obviously, some of that's going to be retirement and runoff, and some of that's going to be consolidation. Some of the changes that Carney made when he first got into power is there was consolidation in a number of the portfolios that were outstanding. So that also shrinks the amount of support needed. So you look at the 25, 26 operational deficit here, to your point. And as we look out to 2028, 29, the expectation is that we'll be in a positive cash flow perspective at that point, with a still focus on CapEx spending, which I think is great for Canada if we continue to spend on CapEx and in the right way. So I thought this was a great chart, just a visual to look at that split between operational and capital expenditures. And that's going to be an important piece to continue to review. Next chart, just around program spending, and this is really with the focus on how we look at everything. And so the slowdown, and I had to actually do some additional research to understand what's program spending. And program spending within the Canadian government is really their day-to-day expenses. So what are they spending on the operations of the business? What are they spending on continuing to run and fund the existing programs? And really the focus is to let's just lock in on what we have, not put any additional programs in place to, increase what we've been doing within the government. Let's just bring that to a bit of a standstill now. And you see that with the focus on that. And look, I don't think that's a terrible thing. Obviously, if you work in the government, you may view it differently. But from a perspective of what it appears Carney's trying to do is run it more from a business perspective, which is here's our operations. Let's just focus on maintaining and reducing some costs we have in there, and then look at how we're going to grow Canada, the enterprise going forward. So I thought this was a great visual around thinking about how that's going to look. Next one, we are talking about public debts and interest charges. And so this would be the one where we would start to think about, okay, now what does this mean? We're going to run a deficit. What is this going to mean to Canada from perspective of how much is this going to cost us? And so I thought this was a great breakdown. So if we look at the public debt charges, obviously increasing, and then the interest bite. So we're starting to see, because rates are at a higher point now, we're starting to see that those interest charges start to pick up. And as we continue to run a deficit into the foreseeable future, the cost to carry that load is going to be more and more punitive as interest rates stay elevated. So it's something that I think is important to think about. But when I step back and look at what governments have been doing for years and decades, as you can look at Japan, certainly as a prime example, Japan's been running massive deficits forever. And if interest rates are zero-ish, you can have big deficits and it doesn't bite into the growth in the economy. Obviously, there's many people that'll argue the other side of that, in that we should reduce deficits with a focus on austerity. I don't think we're in that particular environment right now, because the governments of the world are spending to grow and stimulate their economies. Therefore, it gives Canada and the Canadian dollar a little bit of ability to continue to take that approach as well, which is have some leverage and debt. Interest rates are relatively low, and try to put ourselves in a position to continue to win for the future. But I think this is an important piece to focus on, where people worry about the size of the deficit and more personally worry about the costs associated with that size of that deficit. So I thought this was a great chart that explained that. As always, the opinions expressed do not necessarily reflect those of National Bank Financial. Should you have any questions, please certainly feel free to speak to your advisor, to myself. Everyone's risk tolerance is a bit different and should be taken into account when you're making investment decisions. And that's the disclaimer of the day.
Thank you, Ben. So, what's on the agenda for next week?
Yeah, so I think we'll continue to track. I'd say those two things we talked about in the U.S., which is the Supreme Court tariff case as well as the government shutdown. I think those will be two key pieces to follow. The other pieces we'll continue to watch is earnings. And so we've seen a lot of that come out here where companies that are doing better than expected, you're actually seeing quite a nice pop where some of the miners, like Hecla, for example, is a silver gold miner in the US. Good earnings today. Stock was up 15-20% at the open. But we saw another mining company go into acquire another one, and their stock was down 10-15% on the acquisition news. So there's a lot of corporate news to pay attention to. A lot of our earnings continue to come out and likely to sway and have an impact on markets here. I think the one piece that I like to follow big picture wise is what are some of the historic short sellers doing in the market right now. And we've seen Dr. Michael Burry come out with a big short position on AI. Burry was one of the first to identify the subprime housing market, and that's where he made his $1 billion, was short in housing. And now he's shorted a basket of AI stocks for about $300 million. There was another news headline out this week. Deutsche Bank looked at trying to hedge some of their AI exposure by putting some short positions in place to hedge their AI book. So that's kind of twinkling in the background, giving me something to think about for some of the downside risks. I still think money supply in the direction of the market is up, but there are some signals to me saying let's pay attention to levels, valuations, and some other risks that we need to be conscious of.
Yeah. Thank you, everyone. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at group. The link to our daily financial of this video and in your email box if you're subscribed. For our clients, please also reach out to me if you have or if you'd like to book a portfolio review meeting with Ben. Thank you, everyone, for listening and have a good weekend. Bye.
Thanks, everybody. Take care.